Good day, traders. I want to give you a total breakdown of analysis of Eurocad so that you can keep it on your watch list. Of course, I do start this analysis from monthly time frame. Okay, I use monthly, weekly, and daily time frame to get my directional bias, and then I look for my entry in intraday time frame, 4 hours, 1 hour, or 30 minutes, depending on how the structure is to me. Of course, you can make your own directional bias to be maybe 4 hours and daily and use 15 minutes, 30 minutes for your entries. You do whatever suits you, all right? But what suits me most is looking at it pair from monthly, weekly, and daily, and then my entry will come using 4 hours, 1 hour, or 30 minutes, depending whether the trade or the setup is a swing trade or a day trade setup. All right, so looking at this pair from a monthly time frame, you will see that all this low here has been attacked. Okay, the market has moved down massively, but we still have this low that is left. So I am still of the opinion that Eurocard will still come down to attack this low before any reversal. But of course, you see this top equal high that you see here. This market is also coming in future to come and take this equal high to the upside before any reversal. But right now we are not here, we are here. So when you look at the last three candle that was formed on the monthly, you will agree with me that if you consider these three candles, you will see that this sell red candle is much bigger than these little blue candles. That's to tell you that you are having impulse and correction scenario. You are still expecting impulse to the downside. That is on monthly time frame. And when you come to weekly time frame, you will see that the scenario is much clearer. Okay, it's much clearer right here on a weekly time frame because you see impulse, you see correction, you see impulse, you see correction, you see impulse, you see correction. Okay, and the current impulse and correction that is developing, you want to ask yourself, the correction has moved up to what extent has the correction pushed up? You can see that the correction is sitting right at 50%, is rejecting at 50% retracement and is consolidating right here. So when a pair is consolidating at 50% retracement, the probability of it to break out to 61.8 or 78 before the reversal is there. So I'm still expecting this pair to push up, even though my bias is bearish on weekly or on monthly time frame. I can see that the correction is not over yet on a weekly time frame. And when we come to daily time frame, the scenario become, clearer, clearer, okay, clearer. You can see that right here, you have, right here, you have equal high here. You see a lot of rejection here, all right. And right here, you see equal low here. You can see this market has taken liquidity, the buy side liquidity here, and has made a move to the upside. So whenever you have this scenario, all you just need to do is to take a fib of this leg. You are qualified to take a trade at 61.8, which is a discounted price of this move to the upside that breaks market structure. All right, and that is the move that that's the move that comes to this level in the market. That come to this move here was corrected to this level, and that is the move that took us to this level. But if you look at it very well, all these levels here, equal high here, though has been broken to the upside. But if there was a good supply right at this level. As soon as this market broke to the upside, supposed to pick order and flows down massively and does not have any need, to retrace the way it is doing. But you can see that its coming down was instead of impulsive, it was corrective. So based on that, it didn't take any order here for sell. So with that, we're expecting another move to the upside, where we expect it could take a lot of order from here for a massive move to the downside. Okay, now having said this, so let's go to 4 hours time frame, guys. Let's see what's happening in 4 hours time frame. We did say that we still want to move to the upside on this pair, and you see this trend line that is developing here, and you see this massive three-wave move to the downside. This three-wave move to the downside has cleared all the liquidity right uh, at this level, this level, this level. It cleared all, and I told you that how you recognize liquidity grab is when a market move, consolidate, move straight to the downside, and move back with speed. Okay, this is a characteristic of a liquidity grab. And if this move with speed break market structure, correction to a discount, okay, at a level below 50% is a discount. Of course, it's a discount. If you move to that level, that is going to be a trade to the upside, because this is a liquidity grab, okay, and market will return, pick order here and make a move to the upside. If this is a true liquidity grab, guys, you are going to see the speed with which this comes down and the speed with which it moves to the upside. So market has no incentive to return to the low here. Okay, so to just come here, mitigate some of this order block here, pick order here, and make a move to the upside. So the same thing we are expecting here, guys. It has come down, it has cleared all the stop losses here for those that were going long. You see, it cleared it within just an hour, and it moved back to the upside immediately, breaking all structures. So we had wanted a retracement to a discounted price level, which is 61.8. But of course, you see that it came to 50%. That was why we missed this trade. I didn't come to 61.8. It made a retracement to what? To where? To 50%. Okay, and it made a move to the upside. Okay, so now as it made a move to the upside, does it mean we have missed the entry? No, we have not missed the entry. So you can see right here on 4 hours time frame, uh, this level, this particular trend has been taken, has been broken to the upside, and right here, this one has been taken, and of course, this level here, liquidity has been grabbed. We don't expect market to come down to this level again, and right now you have this move to the upside on 4 hours time frame. So what I would like us to do is to look at this move on 30 minutes. Okay, that move on 4 hours that broke market structure. Let's look at it in 30 minutes time frame. You can see that right here, the structure, the market structure has been broken. This is the internal structure. You see it has been broken to the upside. So when you see it this way, for you to get your entry, you must plug your fib. Okay, you ask yourself a question. This move to the upside, is it at premium or at equilibrium or at discount? What do I mean by premium, equilibrium, and discount? If you have impulsive move to the upside, this is the resistance, this is the support, and this is the equilibrium. That's the middle. So this resistance level, from this equilibrium to the premium, from this resistance to equilibrium level is a premium. It's a premium price. Okay, good for sell. And then from this support to the equilibrium level is a discounted price. Okay, good for buy. Okay, so you want to ask yourself a question: is this market above this equilibrium price or below it? If it is above it, it's not good for you to buy. If it is below this equilibrium price, that is where you look for buy opportunity and you have a high probability trade. So looking at this inputs, therefore, you see that right here you are at the middle is still even above 38. So anything from 50% to 100% here is premium. It's not good to buy. Anything below 50 right here is good for a buy because it is heavily discounted. Right now, the market is going to consolidate along this level. And if it break to the downside and break below 50% and come to 61.8, that is a good place to take a trade to the upside with stop loss below here. So what I would love us to do is to mark this level. You can place alert here, stop loss below 78% of the retracement, and then TP at minus 0.618, 0.618. So this is around the 1 to 5 risk to reward. It's a trade that will give us around 1 to 5, 1 to 5 or 1 to 6. 1 to 6 risk to reward ratio, meaning if you risk $20 for this trade, you will get $120. If you risk $1,000 for this trade, you're going to get $6,000. If you risk $500 for this trade, you're going to get $3,000. So that is how I've done the top-down analysis of Eurocad. And what is essential here that I want us to take note of is that when this market was here, it did not grab any liquidity for it to come down. That was why it comes down was rather corrective instead of impulsive. So this market, for it to hit the level at which it will sell very well, it must grab liquidity. How do you recognize a market that has take liquidity and is ready for a sell? You will see as it's making a higher high, higher high, higher high, higher low. It will get to a stage, it will consolidate, it will break to the upside with full speed and then come back to the downside with full speed, breaking market structure in the process. So when it happens this way, correction to a premium price of 61.8 or 78 will give you a big opportunity for a sell to the downside. This structure you are seeing here, this schematic, has not occurred at this level. So you cannot be looking for sell opportunity. The market is still going to make a move to the upside. Just like what you see here, guys. You see the consolidation here. You see as it move up and it come down immediately. You can see that the market flows down. So that is the scenario we are expecting here. So that has not happened. So this level is going to be breached. It's going to be broken to the upside. In fact, this our TP here is even a conservative level. We expect it to even go up further, but I love to take things conservatively. All right. So that's my expectation for Eurocad. And if you check the COT data for Euro, you will see that Euro is bullish. A lot of investors are closing, they are short on Euro and they are increasing, they are long. Right now, we have a net position, a positive net position for Euro right now. Though CAD too has a positive net position, but the positive net position you have for Euro is far more than CAD. So that's my breakdown of Eurocad for you this morning, and I believe this trade will be ready by New York session, because of course, CAD is a New York pair. It moves more in New York than in Europe or London session. So just take a critical look of it and pay more attention to it. Thank you very much. I see you in next video. Bye.